The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. I started the show by putting in the long-term chart on sugar, just to give you an idea of what's been happening in that market. It's pretty indicative of just about anything that's been growing, with the exception of orange juice that got caught up in this freeze that we've experienced. But if you look at coffee, cocoa, sugar, copper, I mean everything, gold and silver, all of these are down quite a bit. And yesterday I understood that the Federal Reserve minutes, they were a little concerned about the slowing rate of inflation. Well, if they look at some of these commodities, they can see that that's a great deal of the problem. Of course, if we're going to increase the minimum wage up to $55 an hour, where it probably should be, then things will probably reinflate. But we'll have to wait and see that. And we had something really significant happen today in the stock market. I know those of you, there's quite a few people out there in technical land that don't always believe in the Fibonacci numbers, but I just wanted to run a few of them by you, because these are really large markets, and they are. I'm going to put in the cash S&P first, and just to give you an idea of how these numbers hit. As you can see, today's open on the cash S&P, the SPY, opened exactly at the 786 retracement of the high from December 31st. It was absolutely spot on. That was a Gartley pattern. The low today has so far been right at a 61% retracement of the low we made on the 6th of January. So that's a very, very important thing to look at. But we're also going to take a look at the Dow Jones Industrial, the E-mini. The Dow is pretty much the same thing, but the E-mini was even more perfect. Now, this happened in the middle of the night, but it's still, these numbers were just spot on. You'll notice that the Dow Jones also hit an exact 786 retracement up there at the 16,470 level. And then when it made its bottom, it completed a ABCD move right to the 1.27 expansion of that move. And the last one we're going to look at is the NASDAQ. And you'll see that here again, we hit an exact, and I'm talking about just within 1 point of something that is trading at 3,576. It just hit it spot on, right exactly at the 786. And so far today we've come down to a 50% retracement of the low from January the 6th, so not too much is happening. By the way, I forgot to mention on yesterday's show, it was one of the most important days in the market. It was Elvis Presley's birthday, and I don't know if there's any Elvis Presley fans out there. I hope there are, but the King made 800 recordings over his 22 years of recording. And I don't know if you folks know much about the music business, but whenever you hear a tune on the music and on the TV, no, on your radio or whatever you're watching, let's try listening to it. You realize that the person that did the actual recording of it makes 0.0004 cents, 4/10,000ths of a penny, and then of course the writer gets 4/10,000ths of a penny, and the engineer gets 4/10,000ths of a penny. Now, if you're really a big star like Elvis or Michael Jackson, people like that, the Beatles, Rolling Stones, they get a little bit more. But this is where they make their huge amounts of money. So when you hear these on the radio, you know that somebody's making money. And this is all taken care of by a special firm that, monitors all of this. But happen to know just a tiny bit about the music business because I had a good friend who was the engineer for Quincy Jones and Smokey Robinson and Gladys Knight and Stevie Wonder, and I got to see how some of the stuff evolved and stuff over the years. So it was really amazing. Anyway, yesterday was the King's birthday. He died in 1977, and that's the way it goes. Let's get back to the commodities. The next one we're going to look at is the crude oil market. As you can see, we've been breaking down very badly. We're ready to just about take out the November lows. That sets up a target down into the 85 level in crude oil, which we mentioned last week that when we were having this cold spell and the market was not reacting well to it, this was indicative of a market that would not respond to good news. And when that usually happens, that means that the market's going to go the other way. And we'll see if that's going to be the case. But right now, it gives a target on crude oil, down around the $84 per barrel level, which is considerably lower than where we are now, trading at 91. So this is another thing that we're looking at, massive deflation coming across, many of these sectors, and that's usually not a good thing, especially when you stop and think that the Fed has been pumping money into basically the banks, and probably they're going to have to pump some more into J.P. Morgan because to pay off some of the fines that they have. But this is not indicative of a markets that are really really wanting to rally very much. Now the next one I'm going to take a look at right here is the corn market. We're going to put up a weekly chart on corn just to show you just how bad this market has been. From the high that we made back at 670 per bushel, we've dropped well over $12,000 a bushel to the downside, and we're making multi-year lows as we come into it. Right now we're trading at around the 410 level. There's a little bit of support down around 406, but that's really not much happening at that point as far as any reason to be looking to buy corn. There's a small 1.618 expansion down there at 406 per bushel, but that's really it's still 4 cents away, and it really doesn't seem like it wants to go very much from where we are at this point, but that remains to be seen. Okay, so the next one that we want to take a look at is the wheat market, because we've also had some situations here where we can find, if I can just find the wheat, just bear with me here. There we are. Wheat is hidden over here, and I will bring the wheat up, and I just wanted to show you this one because this is a perfect example of one of the trades. We look at time and price, and when these things, that's one of the good things about pattern recognition and geometry, is when things fail, it's telling you that they're going to go the other way. And as you can see, we had some pretty good support down at 605 per bushel. It lasted for pretty much about 5 trading days. It wouldn't rally, but it didn't go down until 3 days ago when it started to break, and now we've broken badly. And so when these patterns fail like this, when time and price come together and they're not going to work, you must stand aside and wait for the next pattern, next opportunity. You just go and look at something else. And with all the things that we have to trade these days, with the stock indices and the silver and gold and the currencies, crude oil, I mean, there's just so many things that you can look at to buy and sell, that it really makes it silly to try to pick a bottom. Well, you can pick a bottom, there's nothing wrong with that, but when it fails, you've got to get out of the way. That's the $64 question, is to make sure that you have the sense enough to get out of the way of the move, and that's the main thing. I will put up the smaller time frame in the corn, because this was something that I was watching this morning just to see, because we've had this market come down just absolutely perfectly during middle of December. We've had several really great selling opportunities in corn. Mr. Z in the room for Tiger TV has posted several of these, and he's been very bearish on corn. for quite a while, and his analysis has certainly been correct. And as you can see from the corn, that it's had lower tops ever since the middle of December, and if you even go farther than that, it's way back all the way through August and September and October and November. We've had nothing but lower highs. That doesn't mean that they've had some pretty good rallies, but there's never been anything pronounced to say this. But we'll have to wait and see. There was a real interesting thing that was posted on the internet last night. I'll get flyers from people from TFNN, and one of our listeners from New York sent a picture of Niagara Falls, and Niagara Falls was almost frozen over. It's only the second time in the history. The other time, I believe it was in the early 1900s that Niagara Falls froze. 1903 or something like that, where the whole thing froze solid. I mean, there was no water going over the falls or not. This time there was some water, going over the falls, but there was very, very little. And when you stop and think how bitter cold that is to get the, running something that moving that fast to freeze, you can imagine that that's pretty bad. We have a good client up in Nova Scotia, which is 1 hour east of New York and north of Caribou country up in there, and it's really, really cold. It was minus 52, and all you have to do, he said he bought a new snow blower, and he was really excited about going out and using it. But the problem was when you throw water up in the air, it freezes before it hits the ground. I'd never seen that before, but he said that happened, and I've never seen anything like that. But boy, that's really pretty cold when you stop and think of that. And when you stop and think that that crude oil and heating oil and these things can't rally in the midst of something like this, it's really a really bad situation, all around. There's no question about that. As far as I can see, I will post a chart for natural gas here in just a second, right before we get to the break, and you'll see that it's had a really big break over these last few days, and we'll take a look at that just as soon as I can find it. And where did I put it? Here it is. Yeah, we've had a really it's been going up forever, so this is just a normal break. It's just beginning to look like it has some legs to actually go higher here. So we'll see if it'll turn from this level. But natural gas is people in the country, farmers and people that live out in rural areas will be bothered with this price, but it's not too much. Okay, we got the Dow down about 50, S&P down about 5, NASDAQ down about 17. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, I posted into Tiger TV the 30-minute chart on gold, and it shows that today's low has been a perfect 61% retracement of the low we made just yesterday. And what we're looking for now is to see if this low will hold around the 1220 level. And if that's the case, we've still got a pretty good chance for gold to go up a little bit. Most of the stuff is reacting to what's happening in the rest of the financial markets, but whether that continues on, we'll have to wait and see. Now, I wanted to also put the hourly chart in for March silver, and as you can see, it's formed a perfect Gartley down there at the 1935 per ounce level, and we've rallied about 15-16 cents from that level, which isn't very much for silver, but at least it's holding on to some really strong support. It's only down marginally, for that period of time. Remember, we've been watching this on a long-term basis, on the weekly basis, for quite some time to get down near this area. So we should be close to a spot where we're going to have a chance for what we think is a pretty substantial rally in the metal markets. Many of you that listen to the show here realize that we were talking about the gold stocks, particularly American Barrick, which is the largest of the U.S. gold stocks, and we're going to take a look at that right now because it did make that 61% retracement that we talked about on Monday, right to the exact penny. And now we've been selling off for 4 days, but just very, very marginally, and that's exactly what you'd like to see. is the fact that you're not seeing anything really dramatic happening. We've just been down 4 days now, which is really a perfect scenario, getting set up for another buy if it's going to go higher. The resistance on the upside came in at that 1850 level, which is the 61% retracement of the high from back in October. But if you get a chance to go into Tiger TV and look at this chart, because these are archived and you'll be able to look at them, you'll see that it has a beautiful time and price scenario going back through August and October, and then all through November through December. It was just exactly like the wheat chart that we talked about just a few minutes ago, only this one worked. The wheat chart, it just held there for a little bit and then failed, whereas the ABX actually held, to be much better. And so that's why, we want to watch these, because when they fail, they're going to go the other way. So right now, we're still in a downtrend. We've had 2 lower tops here back in October and another one in December, but the action from the downside that we had down at $15 a share tells us that we still got a spot to take a look at these gold stocks if they back off, very, very quietly, and gold can hold above that $1,182 per ounce level. And silver must hold above $18 per ounce level. Otherwise, it's going to have the same chart pattern that we're looking at in sugar and some of the other things that we're watching. Someone asked a question about lumber. Why does lumber hold up as well as it does? Most of the lumber, as most of you know, comes from the Pacific Northwest, and let's say it's a controlled market, but and it's not really traded very much. The volume on lumber is very, very small, but it does have some pretty wild swings. But it's just, to me, it's particularly untradeable. So I don't really follow it, and haven't for 40 years, and so I'm certainly not going to start now. The next one we want to talk about here before we come up to the break is the soybean market, and that's been the one that's been holding up a little bit better than just about anything else, up on the board now. We got the Dow down about 40 points, S&P down 3, NASDAQ down about 17, so we're bouncing off the bottom here a little bit in these markets, and we'll see if they'll make a reversal today. If not, we would think that they would be looking at some more to the downside. Yesterday, Basil was talking to us about the importance of that 163.50 level, and we tagged that by just a little bit earlier today, and then we had we've had a little bit of a bounce from that level. In fact, it's rallied about 50 points in the Dow, which is it's a considerable amount when you look at it. Okay, we got the Dow down about 40. We got the S&P down 3, the NASDAQ down 15.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we're going to take a look at March soybeans right now. And I was going to have Rich Anderson on the show today, but when the weather gets really cold up in Minneapolis, Rich leaves town. When it was 25 below zero the other day, he and his family decided to head for warmer climates. So I won't be able to get Rich on maybe until next week. Hopefully we should be able to do. I spoke to him this morning, but he's just not able to get to a landline today to be on the show. He was mentioning to me that he's part of, he and his brother run the family farm from the South Dakota, and they have a very large wheat and sorghum crop. Plus they raise cattle, and the cattle are just, being this cold, it's just you basically try to keep them alive. You can't expect them to gain weight during this time, so it takes a great deal more feed, to get the cattle moving. So you're going to see higher meat prices probably, over the next few months. Wheat and pork bellies, well, not pork, they don't trade those anymore, but hogs and cattle have held up relatively well compared to the rest of the complex. But remember, it takes 50 pounds of corn to make 1 pound of beef. So that's why corn is, still a lot higher than it was many years ago, is because we're such a meat-eating country here that it takes a lot of corn to feed the animals to convert it into the high-protein meat. So these are the things that Rich understands the best. I understand the charts. The rest of it is a little more difficult. Let's take a look now at the soybean chart here that we're watching. As you can see here, we had a head and shoulders pattern that we pointed out just about 3 weeks ago. It was a perfect retracement up in that area, just a tiny bit above the 61% retracement, and now we're down near the 786 retracement. But what's interesting about this chart is you'll know that the time in the head and shoulders pattern from the shoulder to the head and the head to the shoulder is nearly equal, and that's when you have the perfect symmetry that you have, because the expansion of the shoulder to the head is 1.27 and the retracement in the head to the shoulder is 0.618. So that sets up a perfect head and shoulders pattern, and that gives a price objective around 1150 in the soybeans. So even though they're holding up relatively well today, they still have a much lower target to look forward to. Once we break the 1255, 1245 level in the March soybeans, which with this much movement to the downside, one would expect that it's probably going to do that. We're having the same situation in soybean meal and soybean meal. They're all selling off, a great deal, but nothing like what we've had in the corn and the wheat. Those have been in major bear markets for quite some time, and it was indicative of a market that really wanted to go lower from the beginning. Remember, when this market was making a high up around that 670 a bushel, we were watching the open interest, and here again, this is one of those situations where the open interest was not following through with what should be happening, and there again it caused the market to finally top out way back there about 18 months ago, and that's what's happened. I've had a request from one of our folks, one of our listeners here at TFNN, to take a look at the heating oil, and I'm going to put the heating oil chart in. And as you can see, we made a perfect 61% retracement in late November. Then we backed off for about 2 weeks, and then we ran up into late December, right on the New Year's Eve, on December 31st, when we made a perfect 786 retracement to the exact tick, and now we've broken down below the 61% retracement. We're trading down around the 2.93 level, and so that means that we're probably going to down probably to 2.77 or somewhere in that area before we find any support. We've had some tremendously bullish news with this cold weather, and folks, it's just not making these things go up, and when they don't go up on good news, they only have one way to go, and that's down. So always remember that how a market responds to the news is as much as important it is as the news itself. Because if you have a market that's extremely bearish and you get bearish news and the market does not go down, it only has one way to go, and that's up. So you have to remember to watch that, because this is where, if you read the book, The Popular Delusions and the Madness of Crowds by Charles Mackey, it was written in the late 1800s, explains that these manias occur, whether it's the tulip bulb mania or the South Sea Island bubble or the Florida land boom or the the real estate in Hong Kong or the real estate in London. Eventually, the law of physics is going to catch up with those markets, and there will be a bear market come in, and maybe they'll even have a downturn in real estate for maybe a month. But that's not any guarantee, because maybe 1 month just isn't enough, to make it, really acceptable. Now, I wanted to bring show you the chart of the Treasury bonds, because the bonds have just been under a great deal of pressure, and they're still having trouble. I mentioned earlier about the Federal Reserve, the fact that they'd had these meetings and that they said they were worried about the fact that there was very little inflation, and you'll be able to realize that bonds have been going down for 18 months. We made a big move to the downside and it doesn't look like it should rally because it's so oversold, but the overall bearishness of the bonds is so poor or so bad that it just makes it really difficult for it to mean anything of any significance for the for a move higher. Now what we're going to do is we're going to take a look now at copper. We've had a request to take a look at copper. We've had a little rally in copper that really didn't go very much. We had a nice Gartley form down around 315, and we rallied about 25 cents, and that just about stopped the market ice cold, and we've sold off about 15 cents from that level, and we're now trading at $3.30 per pound in the copper, and there should be some pretty strong support around 320 per pound. But if you look at copper, in conjunction with what stocks have done over the past 18 months, that correlation had always been about 80%. In other words, when stocks went up, copper went up about 80% of the time together. Not tick for tick, but very, very close. And over the past 18 months, that has totally been a divergent market, and copper has been going down with the stock market going higher. We've got a gold moving up a little bit now from that fib point that we talked about down there at the 1223 level. We rallied about $4 an ounce in gold, which isn't very much intraday, but at least it's held that 1220 level pretty nicely, at least so far today. They asked to see the long-term chart on copper, and I will put that in there, and you'll see that. Just give me 1 second here to get this chart put in, and you'll see that copper has been in a bear market for over 3 years. It topped in January of 2011, and now we're 3 years down the road. We've had nothing but lower tops for 3 years. I mean, every single major top that we had was lower than the previous one. That's just it's telling you that the market's going down. The definition of a trend is if you have lower tops, you're in a downtrend, and if you have lower bottoms, you're in a downtrend. If you have higher tops and higher bottoms, you're in an uptrend. So when someone tells you to trade with the trend, you have to realize that you have to define what the time frame is that you're working on, whether it's a 5-minute, a 30-minute, a 20-minute, or whatever it happens to be. You have to be able to realize that that's the time frame that you're dealing with when you're working with looking at what the trend is supposed to be. I know that it's great market adage or axiom to trade with the trend, but the only way you can define the trend is you have to determine what time frame you're looking at. Because if you ask someone what the long-term chart is on gold, it's certainly up, but shorter term, for the last 18 months, it's been down. We got a call from our friend in Philadelphia. Are you there, please? John, is that you?
Hey, Larry. Thanks for taking the call. Larry, I just wanted to follow up on something you posted just 2 minutes ago. It's really interesting to me, and that's heating oil.
Yes.
Larry, I'm looking at what you posted, and I just find it fascinating how patterns, Gartleys, and fib numbers come together sometime with just such fabulous precision. And in the case of heating oil, this is an excellent example where precision seems to occur. I am making note, Larry, that on that daily heating oil that you posted, the November low down at 282 and change was precisely at a fib 786. The high in January at 314 was precisely at a fib 786 resistance. Wanted to ask the following question. Now that we're at 293 and the fib 786 support mark is just 3 pennies lower at 290, is there any reason you would not buy heating oil if it got there to 290?
Well, the two things that trouble me about that heating oil chart, John, is the fact that over the last 5 days, if you'll look at it real closely, we didn't have any rally at all. The market was basically in a really tight range for 3 days with almost the same high, and then of course today it's broken down really badly. So what I would like to do is when it gets to that 786 number is I'll go down to the hourly chart and see if I can find a place where I can, enter the market and not risk more than, say, $500. Because when you're getting ready to put on a trade, you must be focused on how much money you're going to risk, as you well know, because you never know how much money you're going to make. No one ever knows that, and we never know whether we're going to be right or not. So you must focus on the risk part of the risk-reward equation. So then I'd go down to the hourly chart on the heating oil and move to that. Pretty much like what you do in the grains. You'll be looking at the same thing, and I don't know anything about the fundamentals in heating oil, and so all I have to go on is the chart. So when it gets to that level, I know that there's enough people out there that do know about heating oil that they'll be trading it too, and that'll give me the edge that I need if it does hold that 290 level. But you're right, absolutely correct. That 290 level is going to be a very important support point.
Larry, speaking of charts, there is a phenomena that is just sticking out. It's like it smacks me in the forehead with a 2x4. It's the weekly chart, and what I'm looking at here on that heating oil weekly is it's now been, Larry, it's been 3 years that heating oil has been trapped in a range of 20% from high to low, merely swinging from up to down, 3 years. And one thing I do know about markets, assuming they're freely traded, and I'm going to assume heating oil is, markets that stay in very tight ranges for long periods of time, when they bust out, they tend to bust out with ferocity. And in the case of heating oil, I could envision a scenario where the bust out is higher. Could also envision a scenario where the bust out is lower. But this one really interests me when it does break either above 330 or above that 270, 265 mark. I just wanted to throw that into the mix.
I see it, John. I posted it into Tiger TV so the folks can take a look at it, because we've been in a bear market since April of 2011, another 3-year bear market. We've had lower tops all along the way in 2012, 2013, and again in 2014. What scares me about this $2.90 level that we talked about earlier at that 786 is the fact that this week's range has been one of the wildest down moves that we've had in a long time, and it's in the face of some really tremendously bullish news, with the cold wave that we've had. So that's why I'm going to be very cautious down at that 290 level in the heating oil, but I will be watching at that point because it might offer a very low risk opportunity. But you're right, if it breaks to the downside, we could be looking at that 270 level in heating oil without very much trouble at all.
Thanks for those comments, Larry. One last question in parting. This morning, early in your show, you posted just fabulous Fibonacci and pattern observations just on the very short-term charts for SPY, the Dow futures, the NASDAQ 100 futures. My question is, did you trade all three of those?
No. John, stay with us, okay?
Thank you.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
John, are you still there?
I am, Larry.
Okay, you asked me a question about how I handle the difference between the NASDAQ and the Dow Jones and the S&P 500. Actually, what was happening, John, as you know, I use alerts on my computer to tell me when these patterns that we're looking for come near completion. And for last night, it happened to be one of those times where I had 6 things go off at once. I had the British pound dollar go off for a sale that turned out to be good, a buy in the euro versus the U.S. dollar, a sale in the Japanese yen versus U.S. dollar, and then we had the sequence that what happened was it was the NASDAQ that first went up to the 786 and just stayed there. It didn't go a tick above the 786. The next one was the S&P. It went up and just missed the 786 by about 3 points. And then finally, about a half hour or so later, the Dow Jones went up to the 465 level, which was the exact 786 on that one. And so as that one was occurring, which was around 2:30 in the morning Tucson time, I went ahead and put the orders in, and then went back to sleep, and I didn't realize there was an ADP report for about jobs, but that doesn't make any difference because I put a stop in anyway because I don't know whether they're going to work or not, and I've just got to, control the risk. It just happened to turn out that it worked really good this day. But that's how I handle it. Ordinarily, I don't stay up, all night. But when the beepers go off, and all of them go off, then I know that something, pretty dramatic is happening. And when these are completing, that's when I want to try to get in at the lowest potential spot that I could, possibly work with. Even if you'd have waited till the opening, you still had a pretty good chance to, to sell a little retracement after the opening of the stock market. So it was not straight down until about a half hour after the opening when the market really started to break. So that's just how I handle it. You asked me a question. I hope that answers your question.
Thanks for sharing. And I just had to tell you, I chuckle imagining what the family members in your household are doing at 2:30 in the morning.
They're at the other computer trading too.
Okay, very good, very good. Larry, thanks so much.
You bet, John, and thanks for calling in. We've got the Dow Jones is only down 20 right now, and we've got the S&P. Actually, the Dow's even only down 13. The S&P's almost unchanged on the day, and the Nasdaq's only down 13. So we might get a big turnaround, and it goes back the other way. We'll have to wait and see. We did have. I mentioned. I should post this chart on the euro because it's such a beautiful one, and we looked at this yesterday, I believe, on the show because of the importance of this level that we were watching in the euro. Yes, we did, and I'm just going to bring it in again because we're watching a major low possibly forming here in the euro versus the U.S. dollar from a pretty high level at this 135.50 level. As long as it holds above 135, it's got a really good chance to have a rally because we've been down for 10 days and we're due for a little bit of a bounce. The same thing occurred with the British pound, but it was reversed. The British pound was making a 786 retracement, and then we had the Japanese yen was making a 786 retracement also. So all these beepers were going off all around the same time between 4:30 and 5:30 in the morning New York time, and it was relatively exciting. There was no news to speak of. It's just that the markets were really just jumping around a great deal. That's the way it looked at the time, and it certainly happened that way. So live every day in an attitude of gratitude, and may God bless.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.